kickstart the proceedings. Avinash Gorakshekhar Johnson right now with a quick check off with his thoughts on the fundamentals really. Avinash, good morning. Thanks for joining in. Would you shy away from being negative on financials this week, Avinash? Because we were expecting some bit of stimulus measures come Friday. They didn't come about. Very strong rumors then. But now that the borrowing calendar is announced, maybe the market would like to extrapolate that all of this is a setup for some bit of a stimulus announcement. Does that make remaining negative on financials for the near term a bit of a risky proposition?
Yeah, good morning, Neeraj. I think, in the near term, despite the fact that markets have been awaiting, for a financial package, especially for the financial sector, I would believe that, the core operating metrics continue to remain weak. In fact, NBFCs which are purely into housing finance, loan against property, are one of the ones which could possibly see the maximum amount of negativity. Nevertheless, private sector bank numbers have been in line with expectations. We saw ICICI Bank's numbers, which were in line. I think the only negative surprise was the slippage number and the overall management commentary, which appeared to be quite cautious because the moratorium number was in line about 30 odd percent. So I think, Neeraj, you're going to see a very restrained activity in the financials until and unless the government actually spells out its strategy and what kind of financial benefits and reliefs it announces in the package. So I think it's better to wait and watch, but I think definitely standalone NBFCs, especially the housing finance companies, are definitely going to find a challenging kind of time, at least for the next couple of quarters.
Okay. So next couple of quarters, yes, could the near term be, however, slightly more positive? Remember, the SGX is indicating a start which is in the green, so that's the interesting one to monitor in the session today. A clutch of newsmakers, of course, stand out, the likes of ICICI Bank and etc., and we'll talk about them too. Nash, let's start off with the big one, ICICI Bank. What did you make of the numbers? What do you think the near term could hold in store?
No, I think, Neeraj, as I mentioned earlier, ICICI Bank has come out with a decent set of numbers, and I think largely in line with expectations. I think the NI growth as well as the profit growth has been quite strong. I think I would be more keen to know what is the kind of commentary, on the loan book growth, because in the coming quarter, the management appeared to be quite cautious, and I think already there's a 30% moratorium. So I think, from the management conference call, it was quite clear that on the asset quality, the management was not willing to give a number, which clearly spells that there is a little uncertainty still prevailing around. So in a nutshell, I would say the numbers are definitely good, but the coming quarter could be a very challenging quarter, and I would prefer to wait and watch before I would venture into to buy the stock at the current level. But yes, longer term prospects continue to be good, but maybe the June and the September quarter could be a slightly challenging quarter based on the asset quality and on the loan book growth front.
The other one, Avinash, the newsmaker that Agam was talking about, which is Hero MotoCorp. Now, it's interesting piece of news because there's some bit of a touch point reopening, and they managed to sell some units. The stock is trading at valuations which are very, very reasonable. Balance sheet strength is there. Would you take some allocation to a two-wheeler major like Hero MotoCorp in your portfolio?
Yeah, I think, Neeraj, Hero MotoCorp definitely is a good long-term kind of pick at the current levels, considering the fact that it does not have a very highly leveraged balance sheet, has got a lot of cash on the books, and I think despite the fact that these vehicles have been sold at a marginal discount, I would definitely look at it from a point that post September, hopefully once the virus issue is resolved, we could see a good bounce back in two-wheeler sales. I would not be surprised that there could be a significant re-rating and a kind of a big buying opportunity for two-wheelers, considering that the coronavirus is now going to make most of the people slightly safer towards urban transport vehicles. So I would believe that yes, longer term prospects are good, but in the near term, these volume numbers are unlikely to actually give the stock a major boost in today's or maybe in the near term.
Okay, well, so do watch out. I think the plus for Hero MotoCorp is the valuation picture, isn't it? I mean, it trades at valuations which are really reasonable compared to its past or some of its peers as well. In fact, if I can just quickly, before I get in Nikki, to talk about the other big, I reckon one of the stocks of the day, is keep in mind, Hero MotoCorp on a price to book basis, FY22 times, trades at 2.7 times. The 10-year averages are at 6.5 4 times price to book, and that's the key thing. I'm not even comparing price to earning, I'm comparing to price to book, and that's the key thing. Yes, the average ROEs come off compared to the 10-year, 5-year averages as in the 10-year averages, but just keep this in the back of your mind. Even on a PE basis, I mean, FY22 about what, 12, 13 times, 10-year average is 17.8 times, so the valuation comfort certainly there. Avinash Gorakhshekhar, what do you make of Shree Cement in light of the fact that their volume growth numbers are much better than ACC and Ambuja, which actually did well when those numbers got released as well?
Exactly, Neeraj. I think numbers have been much better than what the market was expecting, and much better than other comparable players like ACC. Our sense is that the company should be able to maintain margins or maybe improve them slightly, considering that most of the inputs like petcoke and other inputs prices remain soft. I think clearly from a valuation perspective, the stock would possibly see a little bit of resistance, but operational metrics continue to be extremely strong. So we would be a buyer on any decline, and our sense is that except for the next 1 or 2 quarters, possibly growth should resume post September. So I think it's definitely a well positioned kind of company, and given the kind of infrastructure kind of investments the government is going to make, definitely this could be a part of your portfolio. But from a longer term perspective, in the near term, I would believe the stock would at best be a market performer.
So that's one pocket that you should monitor. Technically, it looks very strong as well to Ashish Chaturmotra. Now, to the two big newsmakers of the session, or the last few sessions. One for the current session, and that is the insurance trends for the month of April. Now, remember, viewers, every management had come and had said that business has come to a grinding halt, and expectations. Kotak has put out this note. They expected business to halt by 80, 85, 90, 95%. What has happened is that there has been a decline in the April APE trends, but ICICI Life down about 55%, SBI Life APE, April APE down 73% YOY, HDFC Life only 29% decline in individual APE, and Max Life even better, only 20%. Now SBI Life you can understand because they have a large branch bank insurance channel and that is shut, so therefore that will be a problem. But the others seem to have fared very well, and that's what Kotak is saying, that the 40% decline in individual APE in April better than expectations of about 90-95. Yeah, I think 90-95%. They expected this kind of a decline, and they believe that the demand for protection policies and the spillover from year-end pipeline would have been the likely drivers. Now, Avinash Gorakhshekhar, everybody believes that insurance might tide over this crisis better because people will need insurance. The problem, or one way to look at it, is some of these stocks have already bounced back, but April is turned out, as I read the numbers, pretty good for some of these players. Maybe May could be a bit of a dip because then the spillover effect also goes away. But would you be bullish out here? And if so, which insurance company are you comfortable buying, looking at the valuations that they're trading at?
I think, Neeraj, the entire sector trades at a significant premium, and our sense is that these stocks should not be viewed from a short-term perspective on a quarter-to-quarter basis. Our sense is that insurance is a vertical which is going to gain strong traction once normalcy happens, and I think insurance as a sector is going to flourish significantly. So I would not be too disappointed by the short-term kind of negativity surrounding the net premiums collected for the month of April. But here I would believe that companies like ICICI Pru as well as SBI Life, these are companies which I would believe that one should acquire on every decline. It won't be prudent for me to say what could be the risk reward in the near term, but longer term I would believe that both these companies have very strong kind of geographical network and a very strong balance sheet, and I think the opportunity for growth is immense. So SBI Life and ICICI Pru will be my bet. But yes, the overall sector is going to definitely be interesting to watch, at least post September, when I think normalcy should definitely take off.
Avinash, the other question that I have for you is what to do with the two big stocks, Reliance Industries, or Reliance Jio, if I can call it that, and Bharti Airtel. Now, two more suitors in the fray, as Bloomberg News is reporting. Maybe Saudi Arabian Wealth Fund, maybe General Atlantic. Do you think Reliance Industries can continue the up move? 14th May, I think, is the record date for the buyback. So until then, I think there is anyway some cushion.
Yeah, I think Neeraj, continuously positive news flow on new set of investors coming in for the Geo business is definitely a good sign. Our sense is that yes, Reliance could definitely do well in the near term, considering the fact that it has generated a lot of cash by monetizing the Geo assets, and I think the overall business model and the structure for the telecom sector is definitely now in a pretty good shape. I think within the ARPUs as well as the data usage given during this lockdown, I would not be surprised that the June quarter could also be significantly better for both Reliance as well as for Bharti Airtel. Overall, I would believe that Bharti has a issue with the overall debt on the balance sheet even as of now, but Reliance with the kind of cash it has generated and with the kind of opportunity for the Geo Mart, which obviously is now going to be scaled up in the coming quarters, I would believe that yes, somebody who wants to buy in Reliance should definitely look at it. But yes, from a longer term perspective, I think our sense is that you could see an X-right price of at least 1500 rupees, and thereafter I think the markets would be keenly watching how the inflow of cash comes in, plus how the operating metrics for both the refining as well as the Geo business stands up. So I would prefer to definitely buy on declines, but yes, even at the current levels, somebody who's got a long term view can definitely think of accumulating Reliance.
Same call for Bharti Airtel, Avinash.
Yeah, I think Neeraj, Bharti Airtel also stands to gain significantly, and I think it's the one of the frontline telecom players in a two kind of market scenario, because clearly in the future, hopefully when the 5G auction happens, both Bharti as well as Reliance are going to be the frontliners, because clearly in terms of the with the kind of financial capacity required to be in business, Bharti stands a chance of getting re-rated. So I would believe yes, Bharti also would definitely stand a chance. And as valuations for Reliance Jio go up, definitely I think you're going to see a good amount of re-rating happening on the Bharti Airtel stock also.
Avinash, talking of financials, what did you make of the cards numbers, SBI cards? The stock reacted quite strongly to that performance in Friday's trade. Does it give you the advantages of lower prices for the long term, or do you believe there are better financial names to buy?
I think Neeraj, numbers were in line with expectations, and I think the company has also made a provision for COVID-19. But I think the overall scenario for the credit card business, at least over the next 1 or 2 quarters, remains quite challenging, and it won't be surprising that we could be seeing slightly weaker numbers, especially for the June and the September quarter. And I think spending on credit cards is definitely going to be impacted. So our sense is, investors should not make a immediate hurry to buy the stock at the current levels. We feel that valuations still remain on the higher side, slightly elevated, and we could see a little bit of correction coming in here. So I would believe that yes, I think the private sector banks, as I've been mentioning earlier, something like an Axis Bank or an ICICI Bank, definitely qualify to buy at these levels. Axis Bank below 400, ICICI Bank around 335. I think definitely these are more stable kind of businesses where I would believe that post September one could see a stronger recovery here compared to SBI card, which is a standalone credit card player, and where the the risk intensity is definitely significant, at least for the near term.